Hello traders, Gary Wagner here, just about 1 o'clock in Honolulu, 6 o'clock in New York, last day of the month, January 31st, 2018, and this is the daily report for gold and silver. Nice reversal in the precious metals markets, with them trading lower on the day and closing moderately higher, with gold up about $8.50, closing at $1348.50. Silver also trading substantially higher, up about 25 cents at $17.31. We did send out a special trade alert in gold. We will cover that in detail as we pull up our technical studies. Dollar in essence unchanged, down 0.05, 89.94. U.S. equities, they reversed also, with the Dow closing up 73 points at 26,149. As far as Bitcoin is concerned, we did see some stability with both the CME and the CBOE's cash and futures contracts trading right around $10,000 on the day, $10,060 on the CBOE, and $10,000 even on the CME. Traders, a nice upside move in the precious metals, gold and silver specifically, with gold currently trading up about $8 on the day at $13.48. Although it is traded slightly higher, up to about $3.51, we still have some solid performance. And as you know, this morning we sent out a trade alert in which we recommended initiating a long position in April gold at the market. The market was trading at approximately $13.50, although it was ticking down. Traders should have gotten in anywhere between $13.49 and $13.50. On today's show, I want to detail what parameters we saw in the market that actually triggered the buy. Also, stop placement, where we put it and why we put it there. And then lastly, I want to talk about our current upside target or exit strategy in the market. First, to the identification of a pattern. There is a simple 3-day pattern we are looking, which says that after a defined downtrend in the market, you would first see a pretty large red candle taking the market to a lower low, and that would be followed by a small bodied candle, a star, that would actually gap below the trading range of the prior candle, followed by a third candlestick, which would have to be a large green candle, and then the 3 candles collectively would form a pattern called a 3-river morning star. Although we didn't see the market have a long defined downtrend, we can absolutely say that it has been in a downtrend after hitting these highs roughly 4 trading days ago at $13.65. We met the criteria as the market came down. And then most importantly, we've got to look for this pattern to occur at a logical point that would indicate support. Now, one way to indicate support or resistance in the market is to look for previous tops, because that top could be indicating a potential level of resistance, or bottoms in the market. The other way to look for support and resistance levels is a Fibonacci retracement. That we're using here is simply the entire range from the beginning of the rally mid-December up until the top that it hit a few days ago at $13.65. And when we do that, the very first area we get is the 23% retracement, comes in at $13.36. And this is what I find interesting about that particular price point. And that is, as the market came down, you can see that on this long red candle here, we actually hit a low that was precisely that price point, $13.36. The following day, or the day of the star, the market, we did have a low that went slightly below that. However, if you look at the closing price, because of course on a red candle it opens at the top and then closes at the bottom of that rectangle, but the closing price came in just above, or just at almost, this particular price point. Lastly, when we look at today's trading activity and we look at the low, we see that the low also occurred at the same low that we had at the onset of the pattern, or the red candle. And so therefore, when we put all of these together, we get a pretty dynamic illustration of simply what's called a key reversal or pivot point. A pivot point is when the market is moving in a defined direction And that key reversal or pivot point is the exact moment in which it reverses course, or the moment in which bearish sentiment converts into bullish sentiment in the case of the three-river morning star, engulfing bullish, piercing line pattern, any of the key reversal bullish patterns. Now, typically, you would wait for this market to confirm. And the creation of a confirming daily candle is fairly clear-cut and fairly easy to identify. Immediately following this pattern, you would get a day in which you would have a green candle that would have a higher high than the previous high. You also would like to see it have a higher low. But as far as the confirming candle goes, we'll have to wait to see tomorrow's trading activity to see if, in fact, this pattern confirmed. Next, I want to touch upon the actual stop placement that we recommended, which is to place your stop below 1333, and then in parentheses I put 1330. 1330 is the actual place I'd like you to place a stop. That means that our stop would be right about here. And of course, the reason for putting our stop at that particular price point is twofold. First of all, that happens to be where the market opened in this candle right here. That was also the lows that were achieved both today as well as the first day of the pattern formation, this red candle here. And then lastly, that all corresponds to the 23% retracement, which comes in right in here at 1336. So we're placing it below this particular low, and as you can see from the insert, the low of this candle, this star, should provide the point in which the market will have support. And traders, lastly, I do want to touch upon very quickly our upside target and strategy, exit strategy on this trade. At minimum, I am looking for this particular rally, if it picks up steam and we get the follow through on it, which I certainly believe we will, to at least go to and take out these former highs here, which come in at around 1380. My sense is that this particular run will take us up to about 1400, and it is at that point that we want to take a serious look to see if we get some sort of a bounce or backslide, the beginning of a correction, or if the market barrels through this price point above 1400. But our initial target is between 1380 and 1400. Traders, as you know, we did send out a special trade alert about gold today, but we did not cover silver. My feeling for silver is I did want to let it confirm. However, traders that are involved in silver, if you see any active follow through in the evening session tonight, you can initiate a long position, putting your stop below the lows of yesterday's star. We'll talk about silver in detail tomorrow. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.